take actions for the most part.
Yeah.
Yep. All right. Good afternoon. My name is Sean McGuire, and I'm the Executive Director at the Albany County Land Bank. It's 2:38 p.m. on Wednesday, September 10th, 2025. We're calling to order a meeting of the Land Bank's Finance Committee, and we're holding this meeting remotely per New York State Open Meetings Law. It's available on the Land Bank's YouTube channel for listening and viewing. The live stream is out there right now for you. So today on the call participating from the committee, we have Sam Wells, who's also the board's vice chair. We have other chair or committee members that are unavailable today. So we also have from the Land Bank staff, everybody from the whole team is here. Susan, Shelby, Lillian, Lynette, and myself. So without a quorum here, our meeting today will be mostly informational. So I won't ask for any motions to approve anything, but certainly we'll walk people through if they have any questions. The agenda was circulated to the committee ahead of time. It contains a number of items. I'd like to ask, although it's going to be more informational at this point, to add under new business discussion about 453 Elk Street and unpaid taxes that when that property came to the land bank when it was acquired through deed in lieu of foreclosure. So there's, Sam, are you okay with that? I'll add that as 4B.
Yeah, that's fine.
Okay. All right. So, all right. The first item for review is the minutes, and they reflect the meeting of the last. They reflect the last meeting of the committee on August 13th, 2025. Hope you had a chance to review those. Any questions, suggestions, or amendments to those as presented?
No, they look good. I like the formatting too. That's especially for the financial statements. That's well done, and I appreciate it.
Yeah. All right. Great. We'll keep going ahead with that moving forward. So, all right. So again, we'll move ahead. We'll move forward without adopting those. Review of the financial reports for 2025. Got those in front of you as always. I'll start out with the balance sheet. I'm going to just, jump down to the bottom line, which is the most important, line 74, which is our net equity. So, all through the year, we sort of struggled to get to this point where the revenue of the land bank exceed the expenses. And so I'm happy to say that here we are at the end of August. I thought we'd be there at the end of July, and I think we were there. We just had some bookkeeping to catch up on. But end of August, we have a net revenue of 155,164.45. Everything else looks really good. Going back up to the top here on line 11, we have $3.4 million in our bank accounts. We have some accounts receivable, the 250,000 from the county that we've now realized, and we're just waiting for that to come in. We have some other current assets, undeposited funds, that's just funds in transit to the bank. So we'll, just as an internal control measure, I review the deposits, make an entry into QuickBooks, then typically Lynette runs those to the bank. So at the end of August, we probably had an entry, that day or the day before, and that those funds are just in transit to the bank, and they just hadn't cleared yet. Prepaid expenses of $15,313.97, prepaid insurance of $19,476. We have grant receivables of $294,081. And then moving down, you'll see what we do with our property inventory. Our total property inventory after our adjustments was at about $1.5 million, leaving us a little more than a little more than 5.5 million in total current assets. On the fixed assets, we've got some furniture and equipment and some computers that we list, and some accumulated depreciation that goes along with that. Our right to use asset is our lease here. You'll know there's an offsetting liability that goes along with that. And so our total assets are at $5.7 million at the end of August. Any questions on assets?
None here.
All right, moving forward, liabilities. Pretty clean liabilities on the balance sheet here. Accounts payable, as I say, every month there's some timing that goes along with that. We have some payments that are approved that haven't been cut yet. We try to pay. We take advantage of the terms that we receive. So if something is net 30, we typically pay somewhere between the 25 and 30 days, depending on how the transit of the funds are to our vendor. Credit cards, $8,800. Again, sort of a timing issue. We get a little bit more time with our money, with our credit cards, and then we pay those in full every month. That I believe that balance has some of the appliances for 79 Elizabeth Street. And so a little bit of a higher bill, but just because we're in the middle of a project here. You'll see we still carry that account payable to Albany County for the value of the grant they provide in the event that we sell properties in excess of a certain value. But again, with the inventory being what it is, it's not quite, we haven't been having to trigger that account payable, but we still show it. So it gives us a more conservative position. Again, timing issues, IRA payables that have to be posted to accounts. We've got some additional pieces, our deferred revenue on line 63 for LBI phase 2, $111,000. That is all out now though for LBI, our LBI phase 1 is all out, and we're getting to the end of LBI phase 2, and that's where 79 Elizabeth Street is in terms of funding. And then we do have our next round of funds, and we'll have some more applications going in for other programs too. You'll see our co-development revenue that we anticipate. And right now, we don't have anything really coming in. I will say that the South End project does have, they get a positive recommendation from the city IDA to go forward with its request for financial assistance, mostly in the form of a pilot to help stabilize the taxes over a period of time and give that pro forma a good stable position in the financing and the 4% tax credits it's going to get from New York State to make that project happen. So just wrapping up, everything balances out here. Well, total liabilities, you'll see 586, unrestricted net assets, line 73, 4.9. Total liabilities and equity on line 76. The bottom line number, everything balances out around $5.7 million. Matches up with line 39. And that's why they call it a balance sheet. Any questions on that?
No questions.
All right, great. I don't really have, we can go through the provided for you the profit and loss statements, but nothing really out of the ordinary there. I'm sort of a broken record on line 4, which is the city of Albany. We we anticipated maybe some opportunities for grant money from the city, but that hasn't come along. It's not a blame situation or anything. There just hasn't been that. And so we anticipated maybe there might have been an opportunity there this year, but we didn't get there. That's all right. LBI, you'll see our LBI phase 1, our actuals and our budgets. You'll see that phase 2 income, our actual and our budget there, and we still have a little ways to go. And that's a bit of a blend too, because the LBI phase 2, those LBI programs have continued over time. But I'll just jump down. There's again nothing terribly shocking or exciting here. I'll maybe say that on line 14, our fee income for the year is going to be $20,000. You get below that into lines 15, 16, and 17, you'll see we're about $23,000. So we're doing better on the revenue for our fee income. A little bit of donation income that we get that we don't necessarily budget for. That usually comes through some philanthropy. On our website, we participate with Candid, and so that does help us link into some giving funds, tax advised donor funds that we can sometimes benefit from, where somebody's looking to reduce their tax liability and send some money our way. Starting at line 21, it's just our cost of goods sold, so the cost of holding and maintaining our properties. That way we can get an accurate count as to what the impact is to the land bank to hold the real estate and manage it over time. And that's always influential when we're looking at selling property. We go back and we look at our cost of goods sold to understand if we're losing money significantly and need to make some adjustments or make some strategic decisions about how we handle those properties going forward. I'll just jump down to the bottom line on the profit side, the gross profit. it shows a loss, and that has to do with some of the cost of goods sold, 336,991. Or I'm sorry, no, let me restate that. We have a budget, total gross profit of 956,700, and right now we're at 619,708. So we are, yeah, pretty much on target, 2/3 through the year and 2/3 through, those gross profits there. Expenditure side, we're still doing well on line 63 with our salaries. We certainly had some staffing changes, and that does result in some savings that we can take advantage of, and it helps us overall. You'll see that we're about $52,000 under on our health insurance at this point, but we still have a little ways to go. And I know we just had a bill that went through, so you'll see that number tick up in September. Again, I'm not really seeing anything that I would really, point out as something that we have to be overly concerned with. Let's see, line 85, it looks like we're, saving for $28,000, but it's just because we roll up some of these expenses to a top level category, and then we add some more detail. You'll see at line 86 for our e-property subscription. But overall, at the end, again, we're doing well. Our line 105 net operating revenue, $78,000 for January through August, and then going bottom line to line 113, our total net revenue matches up with that balance sheet number of 155,000 and change. And so that's the profit and loss January through August, budget versus actuals. I provide for your reference just where we were this time last year. And if you have any questions about that, happy to go through it, but more again for your reference only. So that's what I have for the presentation of the financial reports. Any questions on the profit and loss?
No questions there. Thank you.
All right, thank you. 2 items under new business. One is just an informational budget season 2026. We're going to start working on the budgets and 5-year projections. And I just wanted to verify, last year we had the discussion about how we wanted to handle those projections. That we want to handle those to be, conservative, and what it, would take, what 5 years would look like if we stopped getting any revenue or properties and had to start winding down operations to make sure that we could get through 5 years responsibly, or do we want to, aim for a more aspirational 5-year projection where we think we could head? So I don't.
Yeah, that's a great question. I mean, it depends on your I would go with your whatever your confidence level is in the county and their foreclosure, the auctions, essentially. So if you feel confident we're going to get some properties that we can turn into revenue, I would base it off of that. If if you're struggling to see how it's all going to work, then I would take the more conservative approach and see like what that looks like. I would, that's how I would use the projections. And if things change between now and when we adopt these, we can always revisit that. But that's sort of how I would treat it.
Yeah, maybe what I'll do is I'll sort of blend it, taking a being reserved being reserved enough in the approach to say, what it's going to take us for 5 years, just to be strictly mission focused and be responsible stewards for our assets. And then I think that we as a group can talk about strategically where we can go above and beyond that. And so maybe that we use the 5-year budget projections really as the bar, and we're gonna keep trying to reach over that bar. I think that's probably the better way to phrase that. So so we'll do that. The only other thing, and again we'll talk about this more at the full board, is that we had sold earlier this year, I believe, Shelby, 453 Elk Street or Lynette. That did it close early this year or late last year? Elk Street.
543? Oh no,
453. Miss Curry. Miss Curry with the tax bill. I think it was last year. I think it was late last year. We had sold for the board approved property sale. that property had came back to the land bank through a deed in lieu of foreclosure. And there was nothing in our system that there were any taxes owed on it. But we did, after that was sold, got a notice about delinquent taxes. And we just passed that along to the new owner, who then called the county to find out. We thought that maybe they had missed something on their end. Turns out that when we took that property through deed in lieu of foreclosure, there was still, we took it and it became tax exempt as it would under state law at the time of acquisition. However, when we took it in deed in lieu of foreclosure, the property had accrued a tax liability from the owner that had bought it from us initially. We had taken that deed in lieu of foreclosure and received $2,500 for it, but we never paid, like, we never went in and wiped out the taxes to clean this up. So I'm gonna ask, at the committee here to get your general feeling on it, but I would like to bring to the full board a resolution authorizing us to pay those taxes that were delinquent as a result that were unpaid by the owner, that we took the property back through a deed in lieu of foreclosure, and then any of the fees and penalties that accrued while we held that, because we weren't paying that bill. And I can't tell you why that decision was made, if it was just missed or whether it was pretty, it was meant to be. But my practice since I've been here is that when a property comes in outside of a foreclosure process, we give it a clean bill, a clean financial bill. So I'd like to just continue that and resolve this. Otherwise, we've sold a lot to a neighbor there for her to benefit from, with a $15,000. We'll track the number down, but I'll put in that ballpark. Yeah, so it's a pretty significant number, and that's I don't philosophically and from our mission, I don't think that the right thing to do is to pass that along. But I'd like to just to be able to do that. It's going to hit our financials because we're going to have to take that out somewhere, but I think that's the right thing to do. So
Yeah,
any thoughts?
I agree. I think it's the right thing to do, especially if we represented to our new owner that it was tax free, which we typically do. So yeah, I
Yeah.
think it's the right thing to do. Yeah, that's the right thing
Yeah.
to do. I agree with that.
All right. And the way we'll do this is we're not gonna give money to the owner, the new buyer. We're not going to, make a grant or anything like that. We're simply going to take the bill, and I will have the resolution identify, what we'll identify some of the steps along the way that brought us here, and that, the resolution, if approved by the board, would authorize the payment of those back taxes plus any penalties or interest that accrued during that time. So that way we can sort of clear from our end. But the taxes from the point of sale on are the responsibility of the new owner. And so we're not covering those. We're simply taking care of our business here. So.
Yep. Agreed.
All right. Yep. All right. I think any other questions or thoughts on finance? I will note that it's possible that the finance committee in October shifts to just looking at the budget. If the board approves the bylaws, they're not going anywhere, but will be a slightly different meeting for the finance committee, since a lot of these other discussions about discussions like elk trade or discussion on the financial report are planned to move to the executive committee to discuss more broadly and strategically.
Gotcha. Yeah. Okay.
All right.
My other thought just for committee meetings. I don't know, just something that popped in my head during this one is, maybe I don't know what your guys' setup on the other end looks like, but, given that we live stream our board meetings, I almost wonder, if we go move to a hybrid where some folks get to swing by the offices if people want to. I don't know how many people would want to, though. I think I would probably be the only person to take advantage of it, but
yeah,
just a
no,
food for thought.
I mean, we do this, for I guess the convenience of the committee members, the board members. But if you were here right now, you'll see the staff. We meet in the meeting room together as a team for these committee meetings. So you're certainly welcome to join us. I should have invited you when I saw you today, just to leave your car where it was, come on up and
Yeah, no, just
make
because
yourself
we
at home.
used to do that, all the committee meetings in person, but
Yeah.
and then COVID and everything switched. It's we struggle with attendance a little bit on these anyways, so I think
Mhm.
hybrid is always going to have to be a thing at minimum, but
Yeah.
just a thought.
Yeah.
I don't know if
All right.
if I'm the only one taking advantage of it, probably wouldn't do it, but
Well,
anyways,
you're in good company if you're here,
that's for
we're
sure.
just friends. So no, I mean anybody, any of the board members, and even the public, I guess, could be here in the office with us too. I mean, it's not there's nothing that says you can't. I think this is more of a convenience piece. So
Yeah.
yeah, maybe next month, Sam, we'll see you in the office.
Yeah,
For
maybe
October.
next month.
All right, all right. But I don't have any older old business, and if there's nothing else for this committee, we can stand adjourned at 2:59, and then we'll be back in a minute for the acquisition disposition committee.
So moved.
Thank you.